Welcome back. It's Power Breakfast that you're watching on cnbc TV 18. Now, the United Kingdom's Home Secretary has cleared Vijay Mallya's extradition to India. He now has 13 days to appeal to a higher court. Mallya has tweeted saying that now that a decision has been made by the Home Secretary, he will be able to initiate the appeal process. Top sources in the Indian government have expressed confidence in bringing Mallya back to India soon. Sanjay Suri reports from the ground with the details.
Well, this certainly gets one hurdle out of the way for India, because after the magistrate considered the arguments, she ordered that the file should be sent to the Home Secretary for his consideration. He has now approved the extradition. Now, this becomes the springboard for Vijay Mallya to launch his appeal in the High Court. So this now kickstarts the next and certainly the last process in this long legal path, where Mallya will now go to the High Court in appeal against this particular order of the Secretary of State concerning the magistrate's order.
Well, coming back to the stock-specific action, Vedanta is one stock that has been in focus of late as the company has been reeling under pressure, and this after the corporate governance concerns were raised with respect to the company's investment in Anglo American PLC. Hear out what the CEO had to say on the issue.
All of our growth projects are on track and our acquisitions have yielded very good results. We also put out a clarification regarding a cash management transaction which we entered into with Vulcan Investments. Vulcan Investments and Vedanta Resources, the parents of Vedanta Ltd, have actually provided strategic and entrepreneurial leadership over 3 decades, enabling Vedanta to grow from a single operation to the largest mining or resource company in India. The transaction is, in very simple terms, was to invest our surplus cash, about 5% of our group's cash and cash equivalents, in a product that gives us higher returns with full capital protection intact. And this was done following all corporate governance rules with all of the required approvals and valuations, and we reported it in a transparent manner.
All right, so that is another story that we will be watching out for. But let's shift focus to some key earnings that are due today. Tech Mahindra will be at the top of our watch list as it will be reporting its third quarter numbers later this afternoon. Rima with us here to take us through all the key expectations. Rima.
Well, it's expected to be a steady quarter. So here's our expectation. A dollar revenue growth of 2.5%. On a constant currency basis, we should see a revenue growth of about 3.25 going up to 3.5%. And growth this quarter will be led by deals won in the recent quarter. Remember, in the prior quarter, that's in the September quarter, Tech Mahindra saw record deal wins of $550 million. Of which $300 million came in from the telecom vertical, and that will be the key driver. So expect the telecom vertical to drive the top line growth, even as the enterprise business, which is the non-telecom business, to remain a bit subdued on account of furloughs. Margins will be flattish according to our poll, so at 15.6%. But remember, margins have seen a considerable improvement in the last many quarters. About 2 years ago, the margins for the company were close to about 8.2%. What the company had said in the conference call last time around is that we will see a gradual improvement in margins in the coming 2 quarters. Profits, according to our poll, will be up close to about 1.5%. The key to track will be the opportunity the telecom business throws up, because the street is gearing or pricing in the 5G opportunity for Tech Mahindra. While it is still expected to be a FY21 kind of an opportunity for the company, but any word that the company says, and if we do get in some incremental revenues coming in next fiscal year, that will be an added bonanza. So what they have to say on telecom will be tracked very closely, and even the enterprise business, that's the non-telecom business, the current expectation is that it will grow in line with the industry. Any change in that assessment will be important for the stock. Back to you.
Okay, Rima, thank you so much for that. But now let's go across to Sonal, who will be telling us what to expect from GAIL this quarter. Sonal, good morning.
Hi, good morning, Anisha. Well, first half of FY19 was very strong for GAIL, but we are not expecting that to reflect in quarter 3 of FY19 because the Henry Hub prices have been very elevated. There is a decline in oil prices, and also there is a decline in spot LNG prices, and all of it will reflect in the numbers. So on a consolidated basis, we are expecting a decline of around 3% in revenues. EBITDA EBITDA is expected to decline by around 14%, resulting in 170 basis point contraction in EBITDA margins, all this leading to a decline of 18% in profits. Now, if I split the segments in terms of petchem, gas transmission and gas marketing for you, for petchem segment, we are expecting a weak quarter sequentially. That is because there was shutdown of Pata plant, and also there are declined realizations because of lower oil prices. EBIT is expected to decline 36% on a YY basis and 64% sequentially. Not only that, we are also expecting a decline in the sales volumes. Going on to the gas transmission business, there last time the numbers look very elevated. That is because of hike in tariffs. So this time sequentially we cannot compare the numbers. However, we are expecting gas transmission volumes to go down because of lower LNG imports. So there is there will be some weakness that we'll see in this particular segment. LPG and other hydrocarbons, that particular segment is expected to do well. That is because the LPG prices, they were higher in the month of November. And lastly, for gas marketing, that particular segment did very, very well last quarter. But this time, the trends have reversed. The Henry Hub prices are higher. The LNG prices, spot LNG prices, they have gone higher. So all of this will lead to some decline, and we are expecting 57% sequential decline in the EBIT for gas marketing business. So overall, weak set of numbers expected from GAIL. Back to you.
All right, weak side expected for GAIL. Sonal, what is expected for HPCL?
Well, we are expecting weak set of numbers for HPCL as well. Remember, IOCL, for that particular company, the GRMs were at a multi-year low. That is because of higher inventory losses, and that is something we are expecting for HPCL as well. Now, remember, the benchmark Singapore refining margins have declined by 31% sequentially. That is because of lower gasoline cracks, and that is something that will reflect in the numbers as well. So, we're expecting a decline of 2% in terms of revenues. EBITDA is expected to decline by 53%, and operating profit margins also are expected to take a hit of around 220 basis points. Well, in terms of profitability, there's a wide range. Some of the brokerages are expecting a loss. Some of them are expecting a profit. So we are expecting profits of around 621 crores. That would mean profits almost getting half on a sequential basis. So in terms of refining, HPCL has the lowest GRM across OMCs due to lowest distillate yields and also higher share of gasolines, where the cracks have been very low. So we are expecting very low or even negative GRMs for HPCL this time around, and lowest expectation of GRMs is negative $1.5 per barrel. That compares with $9 per barrel on a YY basis and $4.7 per barrel sequentially. Motilal is expecting core GRMs at around $3.6 per barrel, and on the marketing side, we are expecting gross marketing margins at 4.1 rupees per litre. That compares with 3.9 rupees per litre sequentially. So there is something, some growth is something that is expected, and marketing sales volumes are also expected to increase. But overall, it is expected to be a weak quarter because of higher inventory losses. Let's see how the stock reacts ahead of numbers today. Back to you.
Okay, Sonal, thank you so much for that. So weak expectations from GAIL as well as HPCL, but we'll slip into a short break. We're not done discussing earnings expectations as yet. ACC and Marico also report numbers today. We get you the key expectations on the other side.